Hello, traders. Matt Weller here, Global Head of Research with StoneX, and we've just had the release of the non-farm payrolls report for April. On balance, the report came out about as expected, showing 177,000 net new jobs, which was a little bit higher than people were expecting. However, we saw negative revisions to the previous reports to the tune of about minus 58,000 jobs, bringing the net total right about in line with the 130,000 expected. And the 3-month moving average of job creation comes in right around 155,000. So sort of steady as she goes for the US labor market. One key thing to keep in mind, though, is that these were not necessarily post-tariff numbers. Of course, US President Trump announced reciprocal tariffs on the 2nd of April, and the survey week for this jobs report was on the 12th of April. But keep in mind, it's a backwards-looking report. So if employers last had their payrolls at the end of March, then we didn't reach the middle of the month, and therefore any job losses associated with those tariffs would not be included yet. We'll be keeping a close eye on the next jobs report to provide a little bit more insight there. Separately, wages came in showing about 0.2% month over month growth. That brings the year over year rate to 3.8%. That's probably still a tick high relative to what the Fed is hoping for, something that could keep inflation above the Fed's target. Speaking of inflation, on Wednesday, we got the core PCE report, the Fed's preferred measure of inflation. That came in at 2.6% year over year, continues to slow, but still above the Fed's target. And as a result, we don't anticipate the Federal Reserve will move interest rates this month in May. We'll have a full breakdown of what to expect from the Federal Reserve next week. Stay tuned.